Asia is active. Asia is dynamic. Asia is the world's growth engine, and we are right at the heart of it. We are experts in Asia, deeply rooted, locally connected, globally trusted. Across 10 vibrant Asian markets, we uncover what others don't see, so you stay ahead. We are backed by Prudential PLC, bringing strength, stability, and a legacy of trust, so you can invest with confidence. We connect you to what's next, with local insights, with direct access to companies, so you can make informed decisions faster. With nearly 400 investment experts across Asia, we deliver resilient, long-term outcomes. From equities to fixed income, from sustainability to innovation, from local to global solutions, we position smart money for your tomorrow. Think Asia. Think active. Eastspring Investments.
What a year 2025 has been. Other than the infamous Liberation Day in April, we also saw multiple policy shifts and geopolitical tensions, and interest rates seem to be falling again. So as we look into 2026, Ray, what are some of the key macro themes and trends that our investors should be looking out for?
So let's start with where we were at the beginning of the year. Our core message to investors was that Asia would outperform and that they should be diversifying portfolios away from the United States. What's happened? China, Hong Kong, Japan, Korea, Taiwan have all outperformed very significantly in equities. Singapore's got the best performing bond market in the world, far outperforming US Treasuries. Cutting to the chase for this year, we think in 2026, Asia will probably outperform again. There are two core themes. The first is AI. This huge AI infrastructure build in the US is, if anything, just growing. That is ultimately a huge amount of Asian exports of semiconductors and other electronics into the US that will benefit North Asia. The second key theme is policy easing. The Fed's cutting rates, that's good for everybody. In Asia itself, we've had tax cuts and monetary policy easing in Indonesia and Thailand, in India that will feed into 2026. China's committed to about 5% GDP growth in 2026, and that's going to require a huge policy ease. So fiscal stimulus, monetary stimulus are all going to support markets in this region to a greater extent than the US.
Let's come to you, Vis. Given the macro backdrop that Ray has painted, in your view, how should our investors be positioned for 2026?
Investors need to think of Asia not as one big block, but as a series of different opportunities. We think you need to be active to be able to capture those opportunities, but the core hypothesis remains the same as we said a year ago. Global investors should consider diversifying their exposures away from much more concentrated portfolios. You're able to capture some of the AI dynamics from Asia as well.
It's good to see AI and policy measures supporting Asian markets going forward. I think it's also important for us to highlight some of the risks that we're seeing in markets.
I think there are two core things that really stand out for me. The first is quite simply valuations. The US market is at 23 times forward earnings. That's only 2 turns below the 2000 dot-com peak. It's above where we were at this time last year. So there's a huge amount of vulnerability there. Asian valuations have also gone up. We're no longer absolutely cheap, but we're not nearly as expensive as the US, and that provides a lot of defensiveness for portfolios. The second is really inflation in the US. I think the risk is inflation surprises to the upside, forcing the Fed potentially to have to turn hawkish. Well, that would be a major shock for valuations in the US, and it could generate a dollar rally, which is always a bad thing for EM.
What about you, Vis?
So I think that I go back to market concentration. It tends to make people complacent because the winners have been the same winners for a while, and we think it makes much more sense to manage that risk by taking a more diversified view of those themes that we think are long-term trends. Generally, emerging market investors have benefited when the dollar has exhibited some weakness. I think consensus is that we will see dollar weakness in the near term. there are risks that that scenario doesn't play out for various reasons. However, I think the change in the Fed chair, rather, will be the key moment of 2026. So our expectations would be that there is a fairly relaxed policy towards dollar weakness, but at the core of it, diversification clearly still remains a good thing to do if those are risks you're worrying about.
For more strategic insights and perspectives, please read our 2026 Market Outlook.
投资一定有风险，基金投资有赚有赔，申购前应详阅公开说明书或投资人须知。
Asia is active. Asia is dynamic. Asia is the world's growth engine, and we are right at the heart of it. We are experts in Asia, deeply rooted, locally connected, globally trusted. Across 10 vibrant Asian markets, we uncover what others don't see, so you stay ahead. We are backed by Prudential PLC, bringing strength, stability, and a legacy of trust, so you can invest with confidence. We connect you to what's next, with local insights, with direct access to companies, so you can make informed decisions faster. With nearly 400 investment experts across Asia, we deliver resilient, long-term outcomes. From equities to fixed income, from sustainability to innovation, from local to global solutions, we position smart money for your tomorrow. Think Asia. Think active. Eastspring Investments.
What a year 2025 has been. Other than the infamous Liberation Day in April, we also saw multiple policy shifts and geopolitical tensions, and interest rates seem to be falling again. So as we look into 2026, Ray, what are some of the key macro themes and trends that our investors should be looking out for?
So let's start with where we were at the beginning of the year. Our core message to investors was that Asia would outperform and that they should be diversifying portfolios away from the United States. What's happened? China, Hong Kong, Japan, Korea, Taiwan have all outperformed very significantly in equities. Singapore's got the best performing bond market in the world, far outperforming US Treasuries. Cutting to the chase for this year, we think in 2026, Asia will probably outperform again. There are two core themes. The first is AI. This huge AI infrastructure build in the US is, if anything, just growing. That is ultimately a huge amount of Asian exports of semiconductors and other electronics into the US that will benefit North Asia. The second key theme is policy easing. The Fed's cutting rates, that's good for everybody. In Asia itself, we've had tax cuts and monetary policy easing in Indonesia and Thailand, in India that will feed into 2026. China's committed to about 5% GDP growth in 2026, and that's going to require huge policy ease. So fiscal stimulus, monetary stimulus are all going to support markets in this region to a greater extent than the US.
Let's come to you, Vis. Given the macro backdrop that Ray has painted, in your view, how should our investors be positioned for 2026?
Investors need to think of Asia not as one big block, but as a series of different opportunities. We think you need to be active to be able to capture those opportunities, but the core hypothesis remains the same as we said a year ago. Global investors should consider diversifying their exposures away from much more concentrated portfolios. You're able to capture some of the AI dynamics from Asia as well.
It's good to see AI and policy measures supporting Asian markets going forward. I think it's also important for us to highlight some of the risks that we're seeing in markets.
I think there are two core things that really stand out for me. The first is quite simply valuations. The US market is at 23 times forward earnings. That's only 2 turns below the 2000 dot-com peak. It's above where we were at this time last year. So there's a huge amount of vulnerability there. Asian valuations have also gone up. We're no longer absolutely cheap, but we're not nearly as expensive as the US, and that provides a lot of defensiveness for portfolios. The second is really inflation in the US. I think the risk is inflation surprises to the upside, forcing the Fed potentially to have to turn hawkish. Well, that would be a major shock for valuations in the US, and it could generate a dollar rally, which is always a bad thing for EM.
What about you, Vis?
So I think that I go back to market concentration. It tends to make people complacent because the winners have been the same winners for a while. And we think it makes much more sense to manage that risk by taking a more diversified view of those themes that we think are long-term trends. Generally, emerging market investors have benefited when the dollar has exhibited some weakness. I think consensus is that we will see dollar weakness in the near term. There are risks that that scenario doesn't play out for various reasons. However, I think the change in the Fed chair will be the key moment of 2026. So our expectations would be that there is a fairly relaxed policy towards dollar weakness, but at the core of it, diversification clearly still remains a good thing to do if those are risks you're worrying about.
For more strategic insights and perspectives, please read our 2026 Market Outlook.
「投资一定有风险，基金投资有赚有赔，申购前应详阅公开说明书或投资人须知。」
Asia is active. Asia is dynamic. Asia is the world's growth engine, and we are right at the heart of it. We are experts in Asia, deeply rooted, locally connected, globally trusted. Across 10 vibrant Asian markets, we uncover what others don't see, so you stay ahead. We are backed by Prudential PLC, bringing strength, stability, and a legacy of trust, so you can invest with confidence. We connect you to what's next, with local insights, with direct access to companies, so you can make informed decisions faster. With nearly 400 investment experts across Asia, we deliver resilient, long-term outcomes. From equities to fixed income, from sustainability to innovation, from local to global solutions, we position smart money for your tomorrow. Think Asia. Think active. Eastspring Investments.
What a year 2025 has been. Other than the infamous Liberation Day in April, we also saw multiple policy shifts and geopolitical tensions, and interest rates seem to be falling again. So as we look into 2026, Ray, what are some of the key macro themes and trends that our investors should be looking out for?
So let's start with where we were at the beginning of the year. Our core message to investors was that Asia would outperform and that they should be diversifying portfolios away from the United States. What's happened? China, Hong Kong, Japan, Korea, Taiwan have all outperformed very significantly in equities. Singapore has got the best performing bond market in the world, far outperforming US Treasuries. Cutting to the chase for this year, we think in 2026, Asia will probably outperform again. There are two core themes. The first is AI. This huge AI infrastructure build in the US is, if anything, just growing. That is ultimately a huge amount of Asian exports of semiconductors and other electronics into the US that will benefit North Asia. The second key theme is policy easing. The Fed's cutting rates, that's good for everybody. In Asia itself, we've had tax cuts and monetary policy easing in Indonesia and Thailand, in India that will feed into 2026. China's committed to about 5% GDP growth in 2026, and that's going to require huge policy ease. So fiscal stimulus, monetary stimulus are all going to support markets in this region to a greater extent than the US.
Let's come to you, Vis. Given the macro backdrop that Ray has painted, in your view, how should our investors be positioned for 2026?
Investors need to think of Asia not as one big block, but as a series of different opportunities. We think you need to be active to be able to capture those opportunities, but the core hypothesis remains the same as we said a year ago. Global investors should consider diversifying their exposures away from much more concentrated portfolios. You're able to capture some of the AI dynamics from Asia as well.
It's good to see AI and policy measures supporting Asian markets going forward. I think it's also important for us to highlight some of the risks that we're seeing in markets.
I think there are two core things that really stand out for me. The first is quite simply valuations. The US market is at 23 times forward earnings. That's only 2 turns below the 2000 dot-com peak. It's above where we were at this time last year. So there's a huge amount of vulnerability there. Asian valuations have also gone up. We're no longer absolutely cheap, but we're not nearly as expensive as the US, and that provides a lot of defensiveness for portfolios. The second is really inflation in the US. I think the risk is inflation surprises to the upside, forcing the Fed potentially to have to turn hawkish. Well, that would be a major shock for valuations in the US, and it could generate a dollar rally, which is always a bad thing for EM.
What about you, Vis?
So I think that I go back to market concentration. It tends to make people complacent because the winners have been the same winners for a while. And we think it makes much more sense to manage that risk by taking a more diversified view of those themes that we think are long-term trends. Generally, emerging market investors have benefited when the dollar has exhibited some weakness. I think consensus is that we will see dollar weakness in the near term. There are risks that that scenario doesn't play out for various reasons. However, I think the change in the Fed chair will be the key moment of 2026. So our expectations would be that there is a fairly relaxed policy towards dollar weakness, but at the core of it, diversification clearly still remains a good thing to do if those are risks you're worrying about.
For more strategic insights and perspectives, please read our 2026 Market Outlook.
投资一定有风险，基金投资有赚有赔，申购前应详阅公开说明书或投资人须知。
Asia is active. Asia is dynamic. Asia is the world's growth engine, and we are right at the heart of it. We are experts in Asia, deeply rooted, locally connected, globally trusted. Across 10 vibrant Asian markets, we uncover what others don't see, so you stay ahead. We are backed by Prudential PLC, bringing strength, stability, and a legacy of trust, so you can invest with confidence. We connect you to what's next, with local insights, with direct access to companies, so you can make informed decisions faster. With nearly 400 investment experts across Asia, we deliver resilient, long-term outcomes. From equities to fixed income, from sustainability to innovation, from local to global solutions, we position smart money for your tomorrow. Think Asia. Think active. Eastspring Investments.
What a year 2025 has been. Other than the infamous Liberation Day in April, we also saw multiple policy shifts and geopolitical tensions, and interest rates seem to be falling again. So as we look into 2026, Ray, what are some of the key macro themes and trends that our investors should be looking out for?
So let's start with where we were at the beginning of the year. Our core message to investors was that Asia would outperform and that they should be diversifying portfolios away from the United States. What's happened? China, Hong Kong, Japan, Korea, Taiwan have all outperformed very significantly in equities. Singapore's got the best performing bond market in the world, far outperforming US Treasuries. Cutting to the chase for this year, we think in 2026, Asia will probably outperform again. There are 2 core themes. The first is AI. This huge AI infrastructure build in the US is, if anything, just growing. That is ultimately a huge amount of Asian exports of semiconductors and other electronics into the US that will benefit North Asia. The second key theme is policy easing. The Fed's cutting rates, that's good for everybody. In Asia itself, we've had tax cuts and monetary policy easing in Indonesia and Thailand and India that will feed into 2026. China's committed to about 5% GDP growth in 2026, and that's going to require huge policy ease. So fiscal stimulus, monetary stimulus are all going to support markets in this region to a greater extent than the US.
Let's come to you, Vis. Given the macro backdrop that Ray has painted, in your view, how should our investors be positioned for 2026?
Investors need to think of Asia not as one big block, but as a series of different opportunities. We think you need to be active to be able to capture those opportunities, but the core hypothesis remains the same as we said a year ago. Global investors should consider diversifying their exposures away from much more concentrated portfolios. You're able to capture some of the AI dynamics from Asia as well.
It's good to see AI and policy measures supporting Asian markets going forward. I think it's also important for us to highlight some of the risks that we're seeing in markets.
I think there are two core things that really stand out for me. The first is quite simply valuations. The US market is at 23 times forward earnings. That's only 2 turns below the 2000 dot-com peak. It's above where we were at this time last year. So there's a huge amount of vulnerability there. Asian valuations have also gone up. We're no longer absolutely cheap, but we're not nearly as expensive as the US, and that provides a lot of defensiveness for portfolios. The second is really inflation in the US. I think the risk is inflation surprises to the upside, forcing the Fed potentially to have to turn hawkish. Well, that would be a major shock for valuations in the US, and it could generate a dollar rally, which is always a bad thing for EM.
What about you, Vis?
I think that I go back to market concentration. It tends to make people complacent because the winners have been the same winners for a while, and we think it makes much more sense to manage that risk by taking a more diversified view of those themes that we think are long-term trends. Generally, emerging market investors have benefited when the dollar has exhibited some weakness. I think consensus is that we will see dollar weakness in the near term. There are risks that that scenario doesn't play out for various reasons. However, I think the change in the Fed chair will be the key moment of 2026. So our expectations would be that there is a fairly relaxed policy towards dollar weakness, but at the core of it, diversification clearly still remains a good thing to do if those are risks you're worrying about.
For more strategic insights and perspectives, please read our 2026 Market Outlook.
投资一定有风险，基金投资有赚有赔，申购前应详阅公开说明书或投资人须知。
Asia is active. Asia is dynamic. Asia is the world's growth engine, and we are right at the heart of it. We are experts in Asia, deeply rooted, locally connected, globally trusted. Across 10 vibrant Asian markets, we uncover what others don't see, so you stay ahead. We are backed by Prudential PLC, bringing strength, stability, and a legacy of trust, so you can invest with confidence. We connect you to what's next, with local insights, with direct access to companies, so you can make informed decisions faster. With nearly 400 investment experts across Asia, we deliver resilient, long-term outcomes. From equities to fixed income, from sustainability to innovation, from local to global solutions, we position smart money for your tomorrow. Think Asia. Think active. Eastspring Investments.
好，各位贵宾，大家好，大家午安，欢迎大家莅临今天的2026投资展望，掌握机遇，主动开创新局的论坛，非常欢迎各位今天的莅临。那在活动开始前呢，请各位可以先享用我们为各位准备的咖啡还有点心。那同时呢，我们在后方有拍照背板，是我们今天2026投资展望的主视觉，也欢迎大家呢在开场前也可以前往后方留下今天我们掌握机遇，一起开创新局的珍贵画面，也欢迎大家可以到我们后方的拍照墙留下珍贵的回忆，谢谢。
What's happened? China, Hong Kong, Japan, Korea, Taiwan have all outperformed very significantly in equities. Singapore's got the best performing bond market in the world, far outperforming US Treasuries. Cutting to the chase for this year, we think in 2026, Asia will probably outperform again. There are two core themes. The first is AI. This huge AI infrastructure build in the US is, if anything, just growing. That is ultimately a huge amount of Asian exports of semiconductors and other electronics into the US that will benefit North Asia. The second key theme is policy easing. The Fed's cutting rates, that's good for everybody. In Asia itself, we've had tax cuts and monetary policy easing in Indonesia and Thailand, in India that will feed into 2026. China's committed to about 5% GDP growth in 2026, and that's going to require a huge policy ease. So fiscal stimulus, monetary stimulus are all going to support markets in this region to a greater extent than the US.
Let's come to you, Vis. Given the macro backdrop that Ray has painted, in your view, how should our investors be positioned for 2026?
Investors need to think of Asia not as one big block, but as a series of different opportunities. We think you need to be active to be able to capture those opportunities, but the core hypothesis remains the same as we said a year ago. Global investors should consider diversifying their exposures away from much more concentrated portfolios. You're able to capture some of the AI dynamics from Asia as well.
It's good to see AI and policy measures supporting Asian markets going forward. I think it's also important for us to highlight some of the risks that we're seeing in markets.
I think there are two core things that really stand out for me. The first is quite simply valuations. The US market is at 23 times forward earnings. That's only 2 turns below the 2000 dot-com peak. It's above where we were at this time last year. So there's a huge amount of vulnerability there. Asian valuations have also gone up. We're no longer absolutely cheap, but we're not nearly as expensive as the US, and that provides a lot of defensiveness for portfolios. The second is really inflation in the US. I think the risk is inflation surprises to the upside, forcing the Fed potentially to have to turn hawkish. Well, that would be a major shock for valuations in the US, and it could generate a dollar rally, which is always a bad thing for EM.
What about you, Vis?
I think that I go back to market concentration. It tends to make people complacent because the winners have been the same winners for a while, and we think it makes much more sense to manage that risk by taking a more diversified view of those themes that we think are long-term trends. Generally, emerging market investors have benefited when the dollar has exhibited some weakness. I think consensus is that we will see dollar weakness in the near term. There are risks that that scenario doesn't play out for various reasons. However, I think the change in the Fed chair will be the key moment of 2026. So our expectations would be that there is a fairly relaxed policy towards dollar weakness, but at the core of it, diversification clearly still remains a good thing to do if those are risks you're worrying about.
For more strategic insights and perspectives, please read our 2026 Market Outlook.
投资一定有风险，基金投资有赚有赔，申购前应详阅公开说明书或投资人须知。
Asia is active. Asia is dynamic.
好，各位贵宾，大家好，欢迎来到我们今天的论坛。那在论坛开始之前呢，也邀请各位可以先帮我们拿出手机，然后扫描一下我们在荧幕上的 QR code， 或者是呢，大家资料袋当中也有今天这个投资大趋势预测的 QR code。我们希望呢，可以让各位扫完之后呢，登入进去会看到我们有几个选项，希望大家可以帮我们这个选择出你认为最可能或者是最期待的马年，也就是明年的投资大趋势会是什么呢？看看大家会不会是集中在同一个 pool 里面，或者是呢，大家的意见 都不一样，会分散在不同的投资标的，所以也希望大家呢在开场前帮我们先做一个这个明年2026年投资趋势的大预测。稍后呢也会让大家知道说，我们今天现场还有我们线上的贵宾在明年趋势预测上有没有什么样的共识，或者是呢，大家的意见会不会是完全不一样的呢？那我们今天的论坛呢，会从2026年的全球经济关键趋势开始，然后呢，逐步走入资产的配置，还有科技投资跟市场布局的核心议题，所以非常的精彩。那一开始也邀请大家跟我们稍微互动一下，先参与到我们线上的投资趋势的预测 QR code 的扫描。那我们也请线上的朋友也帮我们确认一下收讯的状态，然后帮我们将聊天室提问的功能可以先开启，稍后在高峰对谈的环节呢，我们也会开放线上的贵宾帮我们来进行提问，当然现场也可以提问。那同时也提醒一下各位，我们等一下在论坛当中，如果需要使用口译耳机的贵宾，在开场前也麻烦帮我们记得要在后方用证件来换取口译耳机。那我们频道1是中文，频道2是收听英文，所以等一下如果是需要收听中文的贵宾，帮我们调到频道1。那如果现在在使用上有任何问题，都可以直接举手，或是洽询我们现场的工作人员为各位来这个调解一下怎么样使用我们的口译耳机的部分。那也请大家，如果扫不到荧幕的话，我们在资料袋当中都有今天的这个 QR code， 所以欢迎大家也都可以扫描这个资料袋上面的 QR code， 帮我们一起来预测一下明年的投资大趋势。好哇，我相信大家刚刚都有加入了我们的这个趋势大预测，对不对？我们来看一下，我们刚刚已经在场内还有我们一些线上的朋友呢，跟我们进行的一些这个投票。当然，现在如果还刚刚进场的贵宾，也可以帮我们扫描一下这个左上角的 QR code， 或是各位资料袋的 QR code， 继续的帮我们进行投票。看来大家都蛮看好2026年的 AI， 还有变少的，本来在分散投资比较多，还渐渐的变少，有没有？好，看来呢，我们现在一马当先，是我们 AI 创新的部分，有59% 的贵宾现场的贵宾呢，都蛮看好我们马年的新趋势呢，一样是会在我们的科技 AI 创新的部分。分散投资的人越来越少，大家是看了就是我们一开始的这个破之后，AI 创新的人也越来越多。好，我们这个呢，只是让大家一开始呢，对我们这个投资明年的投资趋势有一点互动，希望大家可以来 warm up 一下，稍微有一点热身的感觉，知道说，明年我们可能会在 AI 科技的部分，或者是呢，大家喜欢在不同的领域做分散的投资，还是呢要马到成功，就是股优于债呢？还是比较看好我们的所谓新兴市场这个 emerging market， 让大家可以马力全开。然后当然最后一个选项是我们的股债收息，就是龙马精神。股债收息的部分也是有一些贵宾来做选择，所以目前看来。AI 创新还是一马当先，那就在稍后我们的论坛当中，我们当然专家会为各位来分析一下，是不是跟各位的预测有些许的相同呢？新兴市场也有多一些贵宾加入了。 好，大家一下都会有那个投下去，然后又收回的感觉，对不对？都不知道2026到底该要如何下手。没关系，等一下就是由我们的专家来为各位提供非常专业的洞见，让各位可以在明年2026年呢，可以主动的开创投资的新局。当然是要在年底的时候先掌握好最佳的机遇。所以呢，也非常欢迎大家今天来到我们汉雅的2026投资展望的论坛。那我们今天论坛在稍后即将开始，请大家帮我们把手机调为震动或静音的模式。同时也请线上的朋友呢，可以准备好确认一下收讯有没有问题。那也请开启聊天室的功能，待会可以进行提问。那如果还没有口译耳机的贵宾，等一下如果有需要的话，那趁现在可以在我们的后方用证件来做换取。Channel 1我们的频道1是中文，频道2是收听英文。所以如果需要操作上的协助，可以洽询我们现场的工作人员。谢谢。各位贵宾，大家好！我们今天的2026投资展望，掌握机遇，主动开创新局的论坛即将在3分钟之后开始。我们现在也有请贵宾还有后方的贵宾可以尽速就座，也请将手机调为震动或静音的模式。感谢您的配合，谢谢。 好，各位贵宾，各位现场。
Distinguished guests, ladies and gentlemen, good afternoon. Welcome to the 2026 Investment Seminar. I'm Rebecca Peishuo, your MC today. We know that we are now at a critical juncture given the inflationary pressure changes and the rating cycles, as well as the global supply chain restructuring and the AI boom. They are all impacting the market sentiment. Investors need not just information, but also insights so that they can seize opportunities amid a very uncertain environment. In our seminar, we are going to start with macroeconomic outlook to asset allocation views and the latest trends in tech investments. Before we begin today's seminar, I would like to ask our distinguished guests to stand up and wave at the audience. First of all, I would like to welcome Head of Greater China and Taiwan CEO, Ms. Polly Wang. Polly, please. Welcome. Next, we have three keynote speakers. First of all, Vis Nayar, Chief Investment Officer of Eastspring Investments. Next, our Chief Economist, Mr. Farris. Next, I would like to welcome Eric Lin, Taiwan Head of Overseas Equity and Fixed Income from Eastspring Investments. Welcome. In addition, I would like to introduce to you other guests of honor, Taiwan Deputy Regional Head of Intermediary Sales, Dominic Wang. Also, Mr. Zhengli Yuan, Taiwan Deputy CEO, and Ms. Alice Lee, Taiwan Head of Retail Business. Of course, whether you are joining us on site or online, I would like to extend to you our heartfelt welcome and appreciation. We will work together to identify the directions for investors. Before we kick off the event, I would like to ask Polly to give us opening remarks. Let's welcome Polly. Distinguished guests, ladies and gentlemen joining us on site and online, good afternoon. I am Head of Greater China and Taiwan CEO of Eastspring Investments, Polly. It is my honor to welcome you to the seminar. Every year at this time of the year, we, as a member of the asset management community, would like to share with our investors in Taiwan the latest trends and our insights for medium to long-term investment strategies. I would like to introduce to you our keynote speakers from abroad. First of all, the Chief Investment Officer, Vis Nayar, as well as our Chief Economist, Farris. They both flew in from Singapore to attend the seminar. We know that right now, the Financial Supervisory Commission of Taiwan aims to build Taiwan as an asset management hub in Asia, and that's why our CIO and Chief Economist took the time to fly in to share with you their insights about asset allocation and investment strategies. I think this demonstrates our emphasis on Taiwan as an asset management hub. It is very rare that they too can be present on the same occasion. I'm sure we are going to benefit a lot from their sharing later. In the past couple of years, we have seen changes in inflation, interest rate, tariff policies, as well as geopolitical tensions. And now the rate cutting cycle has begun. We also see new record highs reached at global equity markets. We are yearning to know what are the risks and opportunities lying ahead. We know it's essential. We have to diversify because the overall market is shifting. AI has been leading the market rally, but it's important to stay agile and adaptable. That is also why it takes in-depth research and professional asset management expertise to help you to navigate the changing environment. Eastspring Investments is here to provide our knowledge so that you can enjoy good returns. I hope you will enjoy today's seminar, and I wish you the best of luck for the year of 2026. Thank you. Thank you, Polly. Please stay on the stage. Next, I would like to ask our speakers and the guests of honor to come up for a group photo. First of all, I would like to ask Regional Head of Intermediary Sales, Mr. Dominic Wong. Also, our CIO, Vis Nayar. In addition, our Chief Economist, Mr. Ray Farris, please also come up to the stage. Also, Mr. Eric Lin, Taiwan Head of Overseas Equity and Fixed Income, Mr. Zheng Liyuan, Taiwan Deputy CEO, Ms. Alice Lee, Taiwan Head of Retail Business. Please, let's have a group photo.
Hey, please look at the photographer in the center. All together, 3, 2, 1. Okay, move a little bit closer, a little bit. Okay, 3, 2, 1. One more. Powerful. Okay, let's move to. Ray was like, okay. Thank you, Ray. Okay, thank you. Look at the photographer. 3, 2, 1. Okay, perfect. Thank you. Thank you so much. Please kindly take your seats. And we will now move on to our first presentation, our first keynote speech. 我们接下来呢，马上要进入到今天的第一场的主题演讲。
We will now proceed to the first keynote speech as we zoom in on the macroeconomic background and outlook. And of course, changes in the macro environment will have implications for investments. We are going to invite our speaker, who has over 30 years of experience in the industry.
一起掌声欢迎汉雅投资的首席经济学家 Ray， Welcome。
Okay, you have to work for your tea and snacks. The investment, environment for the last year has been all about tech and AI, and some people call it a bubble. Some people look at it as an AI gold rush. In the United States, from 1848 to 1855 in California, there was a gold rush, a real gold rush. People went out trying to make a lot of money very quickly, finding gold. Asia participated in that gold rush. There were a lot of people from this region that went to the US and mined for gold. So I have a question for you, because this is relevant to thinking about what Asia is doing now in the US AI infrastructure gold rush. Can anybody put up their hand and name a company that started during that gold rush in the United States and California, that still exists today, that is actually very prosperous, listed company? I'm sure that many people in this room own the products of that company. Can anyone, somebody here knows? Anybody? I guarantee you, somebody in the room on the weekend, you're going to use this company's products. No one. We need more history lessons. Levi Strauss, jeans. Now, the key thing about Levi Strauss is that Levi Strauss did not mine for gold. Levi Strauss sold materials to the miners so that they could mine for gold. He didn't care if the guys over there struck gold or the guys over there did. He sold to everybody. Now, if we think about what Taiwan tech and Korean tech and really Asian tech is doing right now, it's not really mining for gold. It's selling the chips, the electronics needed to the hyperscalers who are trying to be the guy who comes up with the best LLM model. And we don't care which one of the US hyperscalers ultimately wins. All we care about in this region is that they keep buying the chips. And that's really, in many respects, a lot of the investment thesis. It is that over the next year, there is going to continue to be growth, and this region is going to sell into that growth. Now, to take a step back, at this time last year, the message Eastspring had to its clients was that Asia would outperform the US in terms of delivering very strong returns in risky assets, equities and credit, that Asia would beat the US. So what's happened? The gray bar is the S&P 500. The US has done really pretty well, about 16% returns. NASDAQ a little bit better. But look at everything else. Asia has crushed the United States over the past year. The best performing bond market in the world in 2025 was Singapore. Asian investment grade credit, Asian high yield credit, both outperformed US credit. So what about the coming year? We think the US will continue to do well, but we think Asia is going to outperform again. Why? Well, if you look at the chart at the top, the red line is the current consensus for 12-month forward earnings growth for Asia, Asia ex-Japan. It's about 18%. The black line is the United States at about 14%. Asia has higher growth expected in earnings than the US. Valuations, the US is much more expensive. The US is close to its .com, 2000 .com highs. Asia has gone up. It's not cheap, but it's not nearly as expensive. So one of the key reasons we think Asia will outperform again is it has better growth, and that growth is coming at a lower price. I want to stress this point that At this time last year, it was easy to argue that Asia and Europe would outperform the US because the US was very expensive last year. If we looked at this chart at this time last year, those red crosses were all below historic average. So you could happily just buy an index, MSCI, Asia ex Japan, European indexes. You could be a beta investor and you could outperform. The problem now is that nothing is absolutely cheap. It doesn't matter if it's equities or credit, everything is now above historic averages. So going forward over the next year, you're going to have to be more selective in your investments. You're going to have to pick and choose rather than just buying entire indexes. A key message we have is you're going to have to be, we think, an active investor rather than an index buying passive investor. Why be positive? One way to think of it is there's an old adage, don't fight the Fed. If the central banks are cutting interest rates, asset prices are probably going to go up. What I'm showing you in this chart is what I would call the global policy rate. So I've taken 25 of the largest, most important central banks in the world. I've taken their policy rates, put them together, weighted them by their country's GDPs. Then I look at the 6-month rate of change, momentum in central banks either, let's see if I can do this right, tightening policy or momentum in central banks easing policy. One of the reasons why asset markets are all expensive is since the beginning of 2024, globally, central banks have been cutting interest rates, easing policy almost as much as they did during the pandemic. This red triangle was our forecast for where we would be at the end of this year. Last week, we had the Reserve Bank of India cut interest rates. We think that Tuesday in the United States, Wednesday our time, the Fed will cut interest rates. Now, if the Fed's cutting rates, that's the world's most important central bank, easing monetary policy, that will, for a period of time, the next 3 to 6 months at least, support asset prices and global growth. But it also allows other central banks to cut interest rates. If the Fed's cutting, other banks can cut. Asia has lots of policy room, and the reason is here. Inflation in Asia is low. Generally speaking, it's below historic averages or central bank targets in almost all countries. This is a key difference from the US. In the US, inflation is above target. It's above target for 16 consecutive quarters. Part of what this means is we expect central banks in Asia to cut interest rates further. Not all of them. And we think we're getting close to the end of the cycle. But we still see some monetary policy easing in China, in the Philippines, in Thailand, and a couple other countries. Importantly, that easing is coming with fiscal stimulus as well. Now, these are all things that have been announced since July of this year. But a lot of these measures don't really have their full impact until the first half of next year. And I'm going to say in a few minutes, when I talk about China, that we expect a new fiscal stimulus in China as well. So we have both monetary stimulus and fiscal stimulus all working in favor of asset markets over the next 6 to 9 months. If I look at a broad picture, growth is going to moderate a bit, but it's not going to crash. We don't think we go into a recession. A key difference is that global growth and Asian growth are going to be much better than growth in the United States. Historically, when growth in Asia improves relative to the US, Asian assets outperform. And importantly, in this cycle, US inflation remains high, Asian inflation is relatively low. Now, if I talk about the US, I think one of the key things to talk about is the tariffs. I know people are bored with the tariffs. They've been in the news for a long time, they've died down. But what the chart is showing you is revenue collections from US tariffs. Tariffs are a tax. And this tax just keeps getting bigger. And it hasn't peaked yet. It probably doesn't peak until April or May next year. Economists like me, early into this, made a mistake. We thought it would increase inflation, that companies would pass on the tariffs. They've done a little bit of that, but what companies in the United States have done, the big impact of this that has been much quieter than inflation, has been in the labor market. So in the top chart, I'm showing you US non-farm payrolls and ADP. ADP is the private company that handles most payments of salaries to workers in the United States for private businesses. And what you really see is that from April, when Liberation Day happened, from April forward, employment in the US just collapsed. Instead of increasing prices, companies decided to manage margins, protect profits, by just not hiring anybody. We've had a government shutdown in the US that means that we don't know what's happened to non-farm payrolls since September, but we do have the ADP data all the way through November. And what the ADP data tell us is that hiring remains very weak. Now, that's coming, sorry, I think I jumped, there we go. Hiring remains weak. The US PMIs are also telling us that hiring remains weak in both the services sector and the manufacturing sector. So I don't think that we're going to get some miraculous pickup in US employment growth. And that's important because if there's no growth in jobs and wage growth slows, and wage growth has been slowing, consumption growth in the US is going to soften. Maybe not collapse, but it's going to be weaker. The US economy is going to be lots and lots of AI and not a lot of anything else. However, inflation in the US remains very sticky, close to 3%. So I show you different measures of inflation and a long-term look at inflation. All of it says the same thing. It came down a lot, it stopped coming down, and now it's kind of stuck. Despite that, the Fed's cutting interest rates. That means that real interest rates after adjusting for inflation, are falling. One implication of that is that interest rate differentials are moving against the US dollar. So we think that over the course of 2026, the dollar probably will weaken somewhat further. How much? Hard to know. It's currency, always difficult. Probably about 3%, maybe 5%. That's important for Asia because if the dollar weakens, it allows interest rate cuts, makes it easier, and it encourages foreign investor flows into equities. Global institutional investors don't invest in depreciating currencies. Now, I want to move to China. We expect China to grow about 4.8% this year, next year, 2026. Very simple reason, because basically the government is telling us this. We came out of the fourth plenum, and the message was we want to keep growth close to 5%, through 2030. The government has the capacity to spend money, to increase its budget deficit, to achieve this growth. I think it will achieve this growth. From an investment perspective, what that really means is the challenge is you need to follow the money. Rather than just buying everything, buying the index, you need to pick and choose. You need to invest with the Chinese government. Now, there's a reason for that. If we look at where growth in the economy came from this year, it came in large part from those green bars, net exports. A lot of that had to do with tariff front-loading of exports. That's not likely to repeat in 2026. Those green bars are probably going to come down, which means the government's going to need growth from consumption and investment. The nature of growth is going to change. Export growth is already beginning to moderate. I don't think it's going to collapse, but it's softening. And crucially, credit growth has slowed significantly. Now, I've covered China for 30 years. If you put me on a desert island and gave me only one piece of information to forecast this economy, it would be that red line, credit growth. If credit growth is coming down, the Chinese economy slows. If credit growth goes up, the Chinese economy accelerates. Credit growth peaked in July. All of the data tell us the economy has weakened since. 2 days ago, the Politburo came out and said it would keep proactive fiscal policy and monetary policy in 2026. I think there's going to be a new, large fiscal stimulus program. A key reason is what the PMIs, the purchasing managers' indexes, are telling you is the economy is not really doing much. It's kind of stagnant. And that's because the property market continues to weaken. Property prices are falling, transactions are falling. That's weighing on consumers. All of that sounds like a negative story on China. I don't think it's quite so negative for two reasons. One, I know the government's going to spend a lot of money. I want to try to follow that money. I want to be very selective in where I invest in China. And two, China has a good tech story as well. What I'm showing you here is that Asian tech and Chinese tech outperformed US tech this year. And we think there's a good chance that that's going to happen again in 2026. Now, if I move to Japan, another case of fiscal stimulus. The new government is introducing what many are calling Sanenomics. And Sanenomics is about one of the largest fiscal stimulus programs in almost a decade. Again, I want to follow that fiscal stimulus program. I want to follow the money, invest with the government. That's not going to be consumption. Inflation is eroding wage gains in Japan. Consumption is weak. However, exports are actually doing better, and the leading indicators suggest exports are going to improve. With that, investment, business capex, is actually growing pretty well. And this is before the fiscal stimulus program, in which the government is going to support investment in strategic sectors. Most important, if I were to come to you and tell you that Japan's economy is going to grow about 0.8%, that doesn't sound like a very good investment story. That's not much growth. But that 0.8% GDP growth is not the equity market. What I'm showing you here is that earnings growth in Japan, the red line, is growing much faster than the economy. This is the key story. This is about corporate restructuring. It's about corporates increasing return on equity, reducing excess cash levels, mergers and acquisitions, increasing share buybacks. To invest in this effectively, you have to choose those companies that are going through that corporate restructuring process rather than just the entire market. Finally, India. India's had a tough year. It hasn't performed as well as the rest of Asia. A lot of that is because the government tightened policy in 2023 and 2024. This year, the central bank cut interest rates 125 basis points. It eased a lot of the restrictions on lending. It's injected liquidity into the economy, and the government has cut taxes in multiple ways. We think all of this is going to feed into better growth, especially in the domestic economy in 2026. And that's important because what it will mean is that India will be an alternative to the AI boom. You may very well want to own some of the AI story, but it's a good idea to diversify portfolios and have something that's not AI that is improving growth. And India, we think, will do that. One of the key reasons is inflation has collapsed. Inflation in India is at a 45-year low. This gives the central bank lots of room to ease monetary policy if it wants to. PMIs, the Purchasing Managers' Indexes, tell us that growth was improving even before the interest rate cut last week. And crucially, when I look at credit growth is telling me that those interest rate cuts that the Reserve Bank of India has done are feeding through into banks lending more and activity improving. I think this will continue into 2026. Domestic sectors such as consumer durables, possibly property, banks, non-banks are probably going to perform better, and they're going to offer an interesting alternative to tech plays. Okay, that's a lot of me. I'll stop there, and I will turn things over to Vis, our CIO, to talk to you about investment strategy.
Thank you. Thank you so much, Ray, for the very...
Thank you, Ray, for the wonderful sharing. Next, we will move on to asset allocation and investment strategies. We would like to welcome our CIO, Vis, who has over 20 years of experience in the industry.
For our next presentation, welcome, Vis.
Thank you very much. Thank you. And thank you, Ray, for a fabulous presentation. Really, Ray's covered a lot of the macro situation around the US, around Asian possibilities. And really, what I'm trying to do in the next very few slides before our fantastic fund manager comes along after me, is to go through a little summary of what we had and also some of our asset class positioning as we look at markets. That worked. So, of course, I can't read that, but I can guess what is being said. So the key message is, I think, some summarization in some ways of what Ray was saying. We think US growth is likely to moderate a little bit. And that means global growth is likely to moderate in the coming year. We've had a fantastic 2 or 3 years, but we think in some ways that's likely to moderate. The other key message, US inflation has continually been sticky. There's a statistic that US inflation has been above the target 2% for 13 consecutive quarters, probably 14 now. And we can take that up and up. The key thing is that that message has been very, very easily digested by markets, but that has some investment consequences based on the longer investment horizon that our teams take. Thirdly, rate cuts are likely to be incoming in forms of monetary easing. And I think markets continue to need to position around that. And finally, very important point, US dollar continues to be weak, and we've seen events of the last week again challenging that. That's a sort of a summary of the big macro position. And as Ray said, when we did our strategy last year, we talked about Asia outperformance. In 2025, Asia markets have outperformed. And we think that's also the backdrop and a case for Asia outperformance in 2026, again, as Ray said. And that's because historically, dollar strength has been challenging, and dollar weakness has been an environment that has helped emerging markets in general, Asia in particular. And with the dollar weakness, it allows central banks in this region to also be able to cut rates and therefore provide some stimulus for markets. So we think that backdrop is potentially quite interesting for Asian markets. So this is now, the next two slides are very dense on words, and I'll try and just summarize what our positioning looks like on the business as a whole. So when we think of global equities, global bonds, etc., there is a very clear focus from our investment teams that the near-term outlook is very positive. So there is very clearly the story of CapEx coming through in these AI hyperscalers, very, very dominant in the US. When I look at third quarter earnings, I think 60% the earnings growth came from that sector. So very important. It's become very, very important in the global markets. And we don't see anything changing near term. So very much valid case of risk on, overweight in global equities. But as we look further ahead, we think there are some clouds. So I wouldn't say it's a negative for growth, but certainly possibly some moderation. And that's really the anchor point. There's a moderation on growth, which then potentially can challenge the global equity story. Again, on government bonds, very clearly, near term, we're very comfortable. But if I just cover credit as well, credit spreads are very tight, but they have performed very strongly. So it's very much a case of worrying a little bit as we think about inflation in the sort of medium term in the US. Digging a little bit into that, think of global equities. Again, the US, I know in this audience, a lot of people would have been very familiar with the US exposure and very happy with the performance over the last few years. And again, near term, there are no worries. We haven't seen any worries from the hyperscalers. We haven't seen any reduction in CapEx spend. And these are very important points for us to focus on as we kind of keep a very close look at what is going on in the US tech sector. But there is no evidence of near-term worries around there. I think that at the moment, it is business as usual. The markets are very happy, and the markets are very clearly seeing positive numbers there. Eric, when he comes on to talk about the tech fund, will of course go into much more detail about that. When we think of Europe, just so that you know, I have been at Eastspring for 18 months. I used to work in Europe. I've only been in Asia for 18 months. I think the Europe story was very interesting because there was really a strong rally at the first part of 2025. But the question is always, where's the growth? So there was a defense story in Germany and a little bit of positive news there, but medium term, that is quite a negative story there. So again, from a multi-asset perspective, that is not attractive. Emerging markets in Asia are really where we think that performance that we saw this year, the conditions are correct to see some interesting exposure for next year as well. Moving on to government bonds and credit, again, in the regional thing, it's very similar. Near term, both credit and duration, near term, we see the environment is positive, but there are some clouds in the longer term. And from a positioning perspective, duration and credit, spreads are very tight. We need to be thoughtful in the medium term, on the watch for volatility in particular, and the inflation narrative and trajectory that we see from the US. I think that Ray was talking a little bit about sticky inflation earlier as well. And we saw that, what I think is a very interesting graph with the tariffs, and really some worries about how that tariff journey translate back into prices and translates back into inflation. So there's some concerns near term. So the good news is that's all my slides. I'm just going to do a quick conclusion. So look, revisiting what I said earlier, we think that growth moderates. We think that rates likely to come down. We think that the dollar remains weak. So this cocktail is likely to be positive for Asia and emerging markets. But when we think about that, that's really around fiscal and monetary support in Asia. But Eastspring is very, very clear about how to invest in Asia. As Ray said earlier, a year ago, the valuations at the index level were reasonable. So you could imagine that you could perform by just having index exposure. As valuations have moved this year, it's very clear that the opportunities in Asia vary market to market and sector to sector. So when we think of North Asia, when we think of Taiwan, of Korea, Japan, China, there's very much a tech story there. It's very much around investing. Ray showed a graph about the performance of those indices. But when we think of property, very negative in China, but actually in India, it's potentially in a mid-stage of a longer cycle. So something more interesting exposure there. When we think of Malaysia, we think of some of the data center activities. When we think of Vietnam, we think of the globalization, we think of the manufacturing and the supply chain diversification story. We have defense in Japan as well as another area. So when we think of Asia, we strongly recommend you think of Asia as a series of opportunities. It's not just one homogeneous area. It's a series of opportunities. And one of the things I've always had from global investors is they want diversification. We strongly recommend thinking about diversification. But diversification is often not available at the index level. So people are disappointed if they have US exposure or global exposure and they invest in an Asian index, because the Asian index has also got very high correlation with US markets. So if you are able to invest actively, Eastspring says think Asia, think active. If you're able to invest actively and build a portfolio of these different opportunities from the region, you're able to build a portfolio and get some exposure that is truly diversifying from just a straight US type of exposure. And I think that, we think, is the really key opportunity as we look forward into 2026. Now, with that, I think we're going to hand over to Eric now, who is going to talk about perhaps one of our most exciting funds that we have in Eastspring, which is the technology fund that he runs.
All right, thank you
Thank
so
you.
much. Yeah, thank you Vis。我们非常谢谢 Vis 为我们带来的这个2026年的全球资产配置的一个新变。
Thank you very much for talking about our allocation of investments in 2026. And now we would like to invite Mr. Eric Lin, Taiwan Head of Overseas Equity and Fixed Income. Hi, my name is Eric. Ladies and gentlemen, good afternoon. It's my great pleasure to be here to talk to you about, in 2026, our views on tech companies around the world and particularly in Asia. Particularly, just like our chief economist and our chief investment officer talked about, we hope that you know that Eastspring Investment, we have a very rigid analysis and studies on the assets and our investments. And of course, many of you here have already invested on our products, and you must be very interested to know how Eastspring Investments still look at the tech sector next year. So this is what I'm going to tell you about this afternoon. First of all, we are very positive in 2026, particularly on technology product introduction. You know that since 2022, the second half of 2022, with the introduction of generative AI, many products has been changed. Your mobile phones, your notebook computers, your cars or robots, your imaginations on them has been changed. I think we all have that experience. You know, you can expect that the devices around you will be smarter and know what you would like to do. And they can remember your questions last time and your expected answers and also provide you solutions. You know, they will become your personal assistants. And in 2026, these products will come into the market, particularly when we look at mobile phones. That will be very obvious. And also notebook computers, smart glasses, self-driving cars, and also other devices around them. You know, particularly what is driving force behind this, you know, these are the AI servers, whether they are GPUs or the customized chips, ASICs. We have seen many new products and also new applications coming into the market. So these make us very excited. So for 2026, 2027, the relevant companies and their earnings, what we think about their prospects will be that we believe that there will be 24% annual increase compared to 2024, and then 2027 there will still be 21% annualized growth. So we haven't seen this many before, this continuous earnings growth. However, right now we are facing an awkward situation. The valuation is not cheap at all. So many investors worry about that whether you would like to continue investing in this sector, but our answer is yes. However, talking about these valuations, so you have to change your investment methods. In the past, maybe you put a lot of your investments on AI equities. However, after the 3 years of the rising trends and the relatively high evaluations, you probably need to participate in this investment in different ways. And Eastspring Investments, we are a comprehensive asset management company. We can help you in your operations of investments for you to seize the opportunities of the technology development, and at the same time, you will have higher protections on your investments by getting the stabilities of our suggestions to you. And many people on this page I would like to talk about, many people worried about AI bubble bursting out. We have been asked this question 3 years. And here we have the technology funds. Actually, we are in the center of the storm or in the center of the stage. Every day we need to face the volatilities of the equity prices and also answer investors' questions. We hope that we have data for you investors to understand why AI has influenced our lives so much. And of course, if one of you use ChatGPT, Gemini, etc. in doing searching or other functions, but think about May this year. What was hot? That's Ghibli style. We use generative AI, ChatGPT, to make the cartoon icons of ourselves. And at that time, I remember that at OpenAI, their CEO talked about this. The embarrassment was that their computing power wasn't enough. Because everybody was passing this information, everybody was doing the Ghibli cartoon. And Google, every time when they announced their financial statements, they would talk about the numbers of their tokens. You know, generative AI, when calculating or computing, they are using the unit of tokens as their output production. In the year 2024, in April, it processes 9.7 trillion tokens. And in September, Google already processed over 1,300 trillion tokens in September. So it actually is 135 times of the growth. And now we can think about, if we think this is the curve here, so this is a beautiful S shape from the beginning, introduction to the speed up stage, speed up of this growth. We don't know when it will end. It depends on whether their products are useful or not. However, we have a witness that it has entered into the speed up stage. So this is the first point that we'd like to share with you. So after speeding up, there's no return. It will going up continuously, of course, at a different speeds. However, just like your credit cards in your hand, in the first 5-10 years, the credit cards needed the companies, they need to use a lot of promotional activities to persuade you to use credit cards. And credit card companies needed to persuade the stores that they want you to install the credit card machine why you needed them, because you have to pay for them. However, right now, everybody are used to using credit cards. a paperless currencies. So similarly, AI is getting to our life gradually, and relevant data has shown this trend. In terms of hardware, here we will see continuous investments in hardware, and Asia will benefit the most. The Asian tech industries, just like our previous speakers talking about that, Asia is in the center of this AI manufacturing industries. So here you see this is the capital expenditure related to AI service. It is projected to grow at an annualized rate of 72% by 2024. And the market worries that maybe it will be slow down. But actually, when we see their financial statement published, actually more and more investments were attracted. 32% investment growth by 2026. So it's kind of like you finally ride onto the highway, and this car doesn't want to slow down. Instead, the car would like to change the shift and continue to speed up. So overall, when we look at the investment, more will focus on AI hardwares, and particularly for Asian manufacturing industries, they will benefit the most. And next part I would like to share with you, how we can imagine AI. Different people might give me different answers because AI is so new. Every day we see a lot of debates talking about how we imagine AI. Eastspring Investments will continue to share with you our insights and also respond them into our investment portfolio. But looking at the history experiences of Eastspring, AI actually is one of the evolutions. It's not the only one. It's not the last one. It's one of the evolutions, but it can be the longest lasting one. So when we look at these paradigm shifts along the history, the first one is mainframe era entering into microcomputer era. I wonder whether you were born during that period of time. I mean, you need to use a car, and there was a car reader. Inside the room, there will be the tubes for the vacuum tubes to do the computing. Most of you probably haven't experienced that era. Most of you probably has entered personal computer era about 1980s. Macintosh, Microsoft, Intel. These were about all our life. The happiness of our life at that time was went to the electronic market, Guanghua here in Taipei, to buy the parts and assembly the computers by ourselves. And the next era is mobile and this era. At the beginning, we have the shell model, and since 2008, smartphones entered the market and everybody moved to use smartphones. And since then, actually, we have 20 years of period of time since then. So we believe that the AI era, if you think 2015 was the beginning of AI, when people started to talk about parallel computing, it's possible it will go into 2030, 2035, or even longer than that. So this is the first part I would like to talk to you. So we talked about parallel computing because it can do a lot of simulations, computing calculations, and give you the best solutions or best answers. And it will last longer than our expectations. It will shape many of our computing methods.
Secondly, people are worried maybe there's an AI bubble. in our view, well, more or less, there may be losers emerging. Yet along the process, there may be a comprehensive ecosystem to enable the winners to emerge. That's something we should focus on. Maybe we can borrow a slide from Jensen Huang. We can divide the ecosystem into 5 layers. First, energy. Energy is important. Without electricity, you cannot run any data centers. Second, GPUs and servers, hardware manufacturers. And then you also need infrastructure, because with the server, you want to build a data center. You have to take into account maintenance, operation, and thermal solutions, etc., etc. In addition, you need models. Now there are multiple models. Google, for example, seems to be ahead of Google AI in terms of models. Last but not least, applications. So the ecosystem is way more complex than before because now we have models. Why are models important? With models, everything becomes more intelligent. Intelligence can rise indefinitely. I'm sure you all pay close attention to your child's education. You send your child to a preschool, they learn to say, daddy, mommy, they learn the phonetics. And then you send them to elementary schools. They start to learn a bit English, social studies, and math. Is that enough for your child's education? No. You want to send them to, high school, universities, and beyond. Therefore, when it comes to intelligence, you always want more and better. Some people say, AI is just another type of worker. If you have an assistant, of course you want the assistant to be very smart, very responsive. You don't want a very, passive assistant. You see my point? You want to pay for the services rendered by a smart assistant. And I think that explains why people are willing to invest in infrastructure, models, applications, etc. So when it comes to applications, we can expect advancements in electric vehicles, autonomous vehicles, robotics, smart manufacturing, etc. So these are all potential elements of the AI ecosystem. We're not, saying this company is better than that one. Rather, we believe this ecosystem will keep evolving. Which company will be able to achieve excellence in what it does? It's bound to be the winner at the end of the day, and we want to invest in those winners. Now, let's take a step back. What is the potential for stock performance of these companies? There are many variables, right? For example, in February this year, we didn't expect the emergence of DeepSeek. In April, no one saw the Liberation Day coming either. It's beyond our ability to predict and forecast. However, we can always see the long-term trend and then concentrate our funding in the highest quality companies. For example, in the PC era, if you invested in the leaders, you can see their stock performance to be rather impressive. For example, Microsoft. If you invested in Microsoft in 1986, you would have 5,000 times returns. S&P 500 over the same period, 28 times returns. Next, if you invested in Apple in 1991, you enjoyed over 1,000 times returns, while S&P 500 just gave you 20 times returns. And now, if you invested in NVIDIA, Broadcom, and AMD, you would have outperformed the index for sure. But given what we saw in the 2 slides, as long as these companies continue to invest in their research and development, doing what they do best over the long term, their performance may match those performances we saw in the 2 prior slides. Well, on this slide, you can see AI is full of possibilities. Robotics, analysis, or high-level computing and interaction. AI can be very versatile. And as we live in a capitalist society, innovation will always be rewarded because they provide the best products and services for the consumer. So we now have a very complete ecosystem and supply chain. The U.S., of course, excels with the upstream design. Taiwan excels in manufacturing and OEM. China stands out in terms of IoT and e-commerce. In fact, if you look at our range of products, we have them all, starting from the Asian Tech Equity Fund to High Tech Fund to U.S. High Tech Fund and Global Technology Fund. With the 4 products, you can see our performance is very impressive compared with our peers. We are committed to give you the best. Thank you. Thank you for your attention. Thank you, Eric. Please return to your seat. Thank you for giving us such detailed and informative presentation. I'm sure as we face the AI boom, we will now have a better idea about what to focus on. After listening to the 3 keynote presentations, we would like to take a group photo. So now our photographer will go up to the stage and take a photo of you staying seated. If you are wearing a facial mask, please help remove it for the group photo. Thank you for your cooperation.
With all of our participants who are here with us today. So please look at the photographer on stage in just about 3 seconds. 好，帮我们看一下舞台上的摄影师。Please look at， 要往中间一点吗？好，如果我们左右两侧的贵宾可以方便的话，可以稍微向中间集中。如果大家愿意这个稍微离开一下座位的话，也 OK。来，我们看一下中间的摄影师。Please look at the photographer in the center。来，我们看一下舞台上正中间的摄影师。来，3、2、1。All right， 有点僵硬哈，因为听了很严肃的话题吗？没有，就是告诉大家2026投资新展望要赚钱了，有没有？来，3、2、1，耶嗨 ！One more， OK， 好，我们再一次，好 ，1、2、3，耶！ 2026投资展望的论坛，我们现在马上要进入。
Now we are going to proceed to the final part of the seminar, that is the panel discussion. Please feel free to enter your questions through Slido, or you can write down your questions on the question slip and hand it over to our staff.
To join us on stage. 让我们首先呢，欢迎我们汉雅投资的首席经济学家。Please welcome our Chief Economist, Farris. Please once again join us on stage for the panel discussion. And of course, I would like to welcome Chief Investment Officer Vis Nayar. Welcome once again. 我们欢迎汉雅投资的投资长 Vis。还有我们汉雅投信海外股票及固定收益部的主管林元平，欢迎林副总。Okay, all right. 好，那刚刚
So we have collected a number of questions. I will ask these questions on your behalf.
online, so I would ask you questions. And the first question will go to Vis, but I'll do it in Chinese first.
First of all, we would like to ask Vis, as Taiwanese investors prefer bond yields, should credit bond allocation next year favor emerging market debts over the U.S.?
Fixed income assets. And for next year, will the recommendation for credit bound allocation be that emerging markets outperform the U.S.?
Great question. So, if looking at the slides earlier, we were talking about credit spreads have had an incredibly strong rally everywhere in 2025, and that rally leads us to sort of be positive near term and also a little bit cautious. I think it's unexpected inflation and anything that slows down the expectation of cuts that potentially could be unexpected volatility. So with the context of emerging market credit versus developed market credit, I think we continue to see some exceptional returns, and I'd put all of Asia in that opportunity set. So I think the answer would be on balance, yes, but I think that there is a lot more risk and volatility perhaps in the outlook today than it was 2-3 years ago.
All right, thank you, Vis. And 我们的第二个问题呢，会
The second question is for Ray. So if the Fed's chair changes, how would that affect U.S. interest rate policy and the dollar in 2026? Will there be sharp rate cuts?
How do you think a change in the Federal Reserve chair would affect U.S. interest rate policy and also the U.S. dollar trend in 2026? Will there be a substantial rate cut?
Okay, so the way I think about this is it really depends on who President Trump ultimately appoints to be the new Fed chair. It's likely, it seems awfully likely, that he will choose Kevin Hassett. Hassett appears to be very dovish. The things that Hassett has so far said indicate that he believes that the Fed should be cutting interest rates much more than the Fed has so far talked about. And I think that would probably worry markets, given that inflation is still, for 16 quarters, and in the first quarter of next year, going on to 17 quarters of being above target. If Trump surprises and appoints someone who appears to be more orthodox, for example, perhaps Governor Waller, then that would probably help to calm markets down a little bit, reduce concern about excessive cuts, and would, as a result, probably do a little bit to stabilize the dollar, keep it in the current trading range.
All right, thank you so much, Ray. And the third question will go to Eric. 让我们第三个问题。
Our third question will goes to Eric. With the U.S. and Taiwan stock valuations high, will tech stocks continue rising in 2026, or will sector rotations dominate? This is a very good question. Actually, after 3 years rising, many tech stocks are already very expensive. So, as a fund manager, our challenge is how to look at this. You know, for the profits of many equities, actually, it has grown substantially in the past 3 years. The EPS maybe have growth. I mean, the profit per share has triple or double. So we have to think about their price. So you will see that whether they will maintain at a very high price level or the peak time has passed. Echoing what our previous two speakers mentioned, in 2026, the macroeconomic outlook, it will be slowing down. And in tech industries, we have seen double-digit growth. However, the difficulty in selecting stocks will be higher, more and more difficult. So in our studies, we need to find new applications or new technologies. So whether they have grown in terms of a volume or their quality. So just like what you say, that the difficulties has increased in terms of selecting stocks. So we will conduct professional studies for our investors to make your decisions. But overall, the tech stocks will, we will say that for a certain portion, you still can put stock of technologies into your portfolio. Our next question is about Japanese yen. If the Japanese yen rebounds, will Japan and global equity markets be affected? Which sectors should investors watch or may benefit?
Reverses its trend. Will Japan and major global equity markets and economies be significantly impacted? Which industries should be watched or might be benefit?
So Ray mentioned earlier the strength of the Japanese corporate earnings numbers versus the general economic growth there. I think companies have done very well this year. I know we've seen some front loading of exporting. I think those numbers were China, but I think that's valid for Asian exporters. Corporate Japan has a history of being fairly able to cope with yen strength. So this is an unexpected situation, I would argue, given the news more recently about this expenditure from the new government and the impact it has on the long end of the curve and potentially on the yen. But if we play the scenario of yen strength, then there's a degree of resilience that I think corporate Japan has exhibited in the past. Having said that, our own portfolio managers are much more interested in mid and smaller cap names in the large Japanese portfolios. They are much more conscious of building equity exposure that is resilient to the currency. I think that the currency is a very, very big theme in some of the larger cap names that we've seen in the Japanese indices, the names that have driven those indices higher. But with a valuation focus, we've increasingly been looking at mid and smaller cap names in our portfolios, and we think those are potentially more resilient around the currency because of the focus around the domestic economy. So I think, again, the Eastspring theme is Think Asia, Think Active, and in the context of countries like Japan, again, you need to be very conscious of where you are allocating your capital and make sure that your portfolios are resilient.
All right, thank you so much, Vis. And our next question goes to Ray again. 那我们下一个问题呢，又是想要对 Ray 来做提问。
Our next question is to Ray. again. So despite stimulus in Asia, China's equity market underperforms. What's your outlook for Asia equities and investment sequence?
Fiscal stimulus, consumption, or tax cut policies, Chinese equities have historically underperformed. So how do you view the overall sequence and opportunities for Asia equity allocation?
Sure. So a lot of that over the last several years, but not this year. It's important to realize that Chinese equities outperformed very powerfully this year. A lot of that had to do with the sort of boom and bust in the Chinese property market and the damage that did to lots of the then, really important companies. That weakness in the property market is going to continue, but the property sector just becomes smaller and smaller as a share of the economy. The government, I think, will continue to expand its fiscal spending to support growth. And the key thing in that is going to be where the money goes. So I might agree with the idea that at the aggregate index level, call it MSCI China or the CSI 300, that earnings growth there will be perhaps softer than the US. And at the index level, that could mean that in 2026, the index might be in line with or softer than the US. However, those companies that directly benefit from what's going to be a large fiscal stimulus are probably going to outperform. The challenge is going to be identifying those companies, following the money, and taking advantage of the specific areas of that fiscal stimulus. And also, one of the things that we're looking at, not just in China, but outside of China, is understanding how some of the policy changes will impact, for example, companies in Japan. And one way that could happen is in some areas where the government is trying to reduce capacity, solar, chemicals, some of the upstream industries, if the government is successful in a limited sense in certain areas of anti-involution, it will reduce pricing pressure on competitor companies in Japan and other parts of Asia. So I keep coming back to this idea that now that we've gone from very inexpensive, cheap index positions to valuations that are above historic averages, investors need to be much more careful. They need to be much more selective, more active in the way that they're managing portfolios.
All right, thank you so much, Ray. 那我们最后一个问题呢，就一样延续我们这个亚洲中国的市场，让我们想。
Our next question is also about China, about Asia. We will ask Eric about whether you can bottom up next year. What's your view on China's tech sector? Could it rebound from the bottom by 2026? Again, this is a very good question. China's tech stock, compared to other countries' tech stocks, they are unique. We know the tension between US and China. So the advanced chips, the US set some limits on these advanced chips from US to China. So China was forced to establish their own supply chain from semiconductor and equipment and applications. However, Chinese companies like PCB companies and also cloud service companies, you will see that Chinese company benefits from, number one, the global AI trend. This is not directly related to computing capabilities, rather on parts. Another I would like to say is the domestic development of AI industries in China, like a cloud service, like a semiconductor. In 2025, we have already seen the trends is going up. We forecast that in 2026, the speed will be even faster. And here, I believe that if we can actively select our selections of our investments, we need to be cautious. We are cautious optimists in our operations in China. Thank you very much, Eric. We would like to thank our 3 panelists. Due to the time strains, we will enter into our conclusion of the panel discussion.
那我们呢，请3位帮我们。
Now we would like to have another group photo here on the stage.
Finale panel discussion. I'd like to thank you so much for the informative sharing today. 那我们非常感谢呢3位讲者在。
So we would like to thank our 3 panelists for the informative sharing and insights on the allocation of our asset, including macroeconomic and then also our portfolio allocations. I'm sure that you have learned a lot and gained a lot of inspirations. We hope that the Eastspring Investments will work together with you to find your investment opportunities with clarity. Thank you very much.
非常感谢 ，Thank you so much. Take your seats. 好，我们再次呢非常感谢我们现场还有线上的贵。
Once again, we would like to thank our participants on site and online. Lastly, please scan the QR code on the screen. By filling these questionnaires, we will be able to better our activities in the future. I hope that with today's sharing from our speakers, you will find your investment opportunities. Once again, I would like to thank you for your participation. Lastly, please return your interpretation headset in return for your ID cards. Thank you very much for your cooperation.
耳机呢要记得从这个就是帮我们留在桌上。如果说没有用证件来换取的话，直接帮我们留在桌上也可以。请帮我们记得将口译耳机归还，或者是留置在桌面，也记得取回自己的证件。那如果有停车的贵宾，请在报到处可以领取我们停车折抵券，但还是要记得要在 B3、B4的停车场缴费机来先过卡，让我们停车塔旁边也有设置一台缴费机，所以也如果有需要停车折抵的话，在报到处可以领取我们的停车折抵券。那记得还是要再过一次卡。那非常感谢各位在岁末年终的时候跟我们一同莅临今天汉雅投资的论坛2026投资展望，掌握机遇，主动开创新局。希望大家在新的一年都有顺利、丰富、精彩的投资新局。感谢大家，谢谢。
要回头。